and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoyed the program, give us a like, share, subscribe. This episode of VOX is a doubleheader. My guests are Klaus Christensen of Know Your Customer and Jacqueline Pang of Artius Global. As RegTech co-founders, they are helping financial institutions with different aspects of automating compliance. With regulations changing and banks' ability to manage both fintechs and new technology changing, it can get complicated. Jacqueline Pang and Klaus Christensen, welcome to DigFin VOX.
Thanks for having us.
We're going to talk about RegTech today, but RegTech is a pretty big topic. And I wanted to, as we're going into the new year, whether you call it 2024 or Year of the Dragon, I wanted to get sort of a big picture sense of where are we really with bringing software and automation into various aspects of compliance and helping firms stay on top of what's always a moving target, right? So with us today for this discussion, I've invited Klaus, who's based in Hong Kong and in Dublin, who is co-founder of Know Your Customer, which is all about knowing your customer. And then Jacqueline Pang joining us from Singapore, where she is co-founder of Artius Global, which is all about reporting, automating reporting, making it super smooth for firms to go about their business, getting all that back office reporting done in an efficient way. So different aspects of what RegTech is all about. So we're going to hear a little bit about their stories, and then we're going to dive into the trends for this coming year. So Jacqueline, why don't we start with you? Very quickly, you can introduce your firm way better than I can, but Artius, you've been running this thing for about 6 years. You've got a background in financial services, operations and compliance. You've worked for asset managers, insurers. So just give us a quick update on where you are with Artius and the reporting side of RegTech.
Yeah, so thank you very much, James, for this invite. And Artius Global is a RegTech with a flagship solution that simplifies basically shareholding disclosure. And we also cover other regulatory regimes such as ESG. I think today we are in a very privileged space of engaging with some of the larger financial institutions in this part of the world, and having that privilege of getting insight into their regulatory concerns for the future as well. So we are based in Singapore with a footprint that's global, and yes, looking very much forward to this discussion we're going to have today. Thank you.
Thanks, Jacqueline. And Klaus, your background, you've been co-founder of Know Your Customer for about 8 years. And before that, you look like you've got more of a technology background rather than a financial services one. So just give us a brief intro.
Well, starting from a tech background is the wrong thing, I can tell you.
Okay.
That's the wrong starting point. But yes, that's where I'm coming from. My co-founder has a legal background. I have a degree in computer science. We founded KYC in 2015 in Hong Kong after coming across that problem in a different scenario and really seeing a big opportunity there. But 8 years later now, we're also present in Singapore. We've always been dual Europe and Asia. So we have always had the Dublin office, and we're also now present with subsidiaries in Shanghai and in London. Over 1,000 users use the platform at the moment across 74, I think, 75 clients from different sectors, I think 11 or 12 different sectors, both Europe and Asia. We're very strong in Hong Kong, obviously, quite strong in Singapore. In Hong Kong, 2 out of the top 5 banks who don't allow me to name them users, and 1 out of the top 3 credit card issuers there for merchant onboarding. And we recently signed the top Singaporean bank. I'm not saying the name. So the ride has been wild over the past 8 years. Not been easy all the time. I don't know, Jacqueline, how your journey was. It was a typical like up and down roller coaster startup journey that we've had. maybe because of the starting points in technology and not knowing so much about our customers, maybe for just the reasons of the environment and funding and all those things that happen to you. But it has been ultimately a really interesting journey. I never learned as much as in the past 8 years. Every year was completely different in my company.
Yeah, I like how know your customer didn't actually know its customers.
That's a typical question that an investor would ask. Do you know your customers? Yes, we do.
But okay, but you've learned them, obviously.
Yes.
Yeah, so let's talk a little. So Jacqueline, I want this conversation to be kind of forward-looking, but obviously we're all based on an accumulation of experience of what's been happening. COVID was a big game changer across the board for many institutions, of course. But Klaus sort of referenced, a bit of that startup founder journey. Where do you see right now, Jacqueline, with reporting and is it changing? Is your business changing? Are the needs of the clients changing?
So I think the demand for RegTech has not abated. I mean, honestly, are you seeing any reprieve from regulatory demands from regulators across the world? I don't think so, right? And we are still seeing a pretty strong momentum despite the economic forecast that looks, there's all gloom and doom. And we are seeing a momentum to leverage on technology for reg reporting. Right? There's also that the trend of naming and shaming financial institutions continue, right? And no financial institution wants to be named by a regulator.
Right.
And hence, RegTech adoption has become a trend today, and financial institutions are really much more open and proactive in investing in solutions like ours, right?
Yeah.
In Asia, I think it is one of the most challenging regions in the world to be regulatory compliant due to fragmentation of regulations. So, for example, if you're in the US or in the EU, you basically have to comply with one set of regs. Whereas in Asia, each market can be completely different from another, right? And I think besides fragmentation, right, there are a number of other factors we are seeing that's driving this trend. Okay, one of them clearly is data complexity, higher data volume and granularity, right? And the sheer volume of regulations, which I've already spoken about, we are seeing over 200 plus, right, new regs every day globally, and manual compliance is really becoming unsustainable. Tight timelines, that's another challenging one, right? Given the tightness of deadlines across multiple jurisdictions, having an efficient mechanism with end-to-end automation is becoming a fundamental, actually. And these efficiency gains that we are seeing with the use of technology is something that FIs are increasingly valuing.
Right. But I think if we'd had this conversation when you first started Artius, it would have been that part would have been the same, right? I mean, that's the fundamental case for why we need RegTech and why banks and others are onboarding RegTech. But I'd like to get a sense of, you specialize in one part of what is a broad category, but I'd like to get a sense of, what is the way that you're engaging? Is it changing the way when you engage with banks, insurance companies, asset managers, the way they're using it, the way they integrate it, what they're willing to pay for it? How are these things changing right now?
So I think in general, we are seeing that financial institutions are becoming more comfortable with outsourcing. The other trend we are seeing is managed services. So I'll talk a little bit about that, right, later on, within the, we're seeing banks struggling, for example, to actually maintain their knowledge base in-house. So with all these challenges, in the forefront, right, there's an openness towards managed service, right? Not just hosting on cloud, but also buying services that will help them with change and, for example, with scanning the horizon, right, for reg changes and keeping up with that. So part of the services that we today have evolved, right, to provide for our clients would include keeping up with regulatory changes, even training, and supporting regulatory change management. So, for example, helping clients with their testing, right, because we understand the regs deeply and we are subject matter experts, so that clients' resources can be more flexible and easily deployed, right, especially to support their core businesses.
So there's almost like a consulting aspect of what you do when you bring in the tech. Yeah. And is that growing? I mean, Klaus, maybe you can talk a little bit about, that more human side of the business. What kind of changes are you seeing in the way you deal with your customers?
Dealing with our customers has always been a challenge because we're a startup, we're a tech company, and fundamentally different from the organizations we try to sell to. They are 120 years old. They have 70,000 employees. We're now 8 years old and we have 70 employees. So it's a very different. They're literally 1,000 times bigger than we are.
Right.
And with all that comes a different culture. There's 11 levels of management in HSBC. That sort of thing, to navigate that is very difficult. So that was one of the tall issues. I think it is for any tech company entering this space. RegTech has inherently this tension built into it that you're a tech company and you're trying to, if you want to go after the best customers, trying to sell into tier ones.
Yeah.
That did evolve a bit over time. I do see a change here, Jamie. In our case, I remember 2018, there was a lot of enthusiasm by, at least in Hong Kong, I'm not sure how it was in Singapore at the time, because we only made it there the year after, but that went on there the same. It was a lot of enthusiasm about innovation. And every bank had their innovation department or their whole innovation floor, and they decked it out like a WeWork.
Right.
And they tried to like get people in touch and try to incorporate new tech from outside. That was a good starting point, but it came up against a good few barriers in the organizations. These innovation departments often were isolated. They were not connected so much to the rest of the organization. And while they try to make it easier to enter into contracts and all that, they couldn't really get past the usual procurement, compliance, and so on barriers that were in banks. So I think they disappointed a bit in the latter years.
I think also
again,
it was just
during COVID, we couldn't.
Yeah, a lot of these institutions didn't really understand it. I remember going in to visit some of these banks, let's call it the early days of DigFin. And, you go onto one floor and it's people in hoodies and sneakers.
Yes.
And funny logos and pictures on the walls and stuff, but they're all just basically like API monkeys, type. And then you go to the next floor because maybe I want to meet the head of the lending business or something. And, it's a wall of suits and ties and Chanel tops and and it's super traditional and there's no funky artwork. It was all like so.
And
clearly
crucially, there's no connection.
Right, that's the point. That's the point. It was not like there was a seamless culture. But is that changing? Jacqueline, you were nodding a lot to Klaus's thing. Do you think it's getting easier for fintechs to work their way through these giant, very old institutions?
Well, honestly, I think tier one is a challenge, long sales cycle, right? Complex organization to navigate through, right? I guess we were fortunate because one of our very early clients was a GSIB, a globally systemically important bank. And that kind of, set us actually on a stage whereby we had to decide whether we are still going to play there. I think today our strategy very much is, I think our sweet spot is what we call the mids. So for example, like leading national banks, like the one that Klaus just won. I think those are kind of institutions that actually are our sweet spot, right? But we have the opportunity to go upwards because we have that GSIB client and the experience, and that makes our solution fit for purpose for a tier one, right? But whether we want to play there, we are opportunistic and we actually go through a partnership model, right? And dealing with them is a challenge, but once you get the hang and they trust you, right, there's actually a lot of work to be done within these banks. Data is a common issue, right? It's an everyday issue. I see Klaus rolling his eyes, and there's a lot of work and value that a RegTech like ourselves, who are with our practitioner background, right, understanding the process, the pain points, and having been from the industry, right, can bring to the table. And they recognize.
Yeah. So once
Jackson said it.
Yeah.
Once you get the hang,
Yeah.
That's the thing. I don't think the industry changed so much, but Jacqueline and I changed. We learned how
Right.
to deal with that.
You learn how
And
to conform to what the clients need.
after a few years, you do get the hang of it. Nonetheless, the industry did change a bit. There was COVID, and that pushed a lot of issues front. The innovation departments were no longer that important because you couldn't play in the nice WeWork decked out spaces, and you couldn't really meet with them. But the need for remote onboarding, for example, or regulatory reporting was still there, even more so in some ways. And so deals were done and things were pushed forward in the regular manner. I think during COVID, banks, in my view, learned to be a bit more flexible because they just had to for a while, and that's still ongoing. So for us, that really worked, and we got our first tier one in December 2020, like in the middle of it.
Right.
And then from there on, it went on. It was good time actually.
Yeah.
And afterwards, the ups and downs of the funding market and the economy, that's kind of a separate issue. I agree with Jacqueline there as well. RegTech is kind of insulated from that. On the upside, our tech use is pushed by everybody wanting to be the most modern and so on. On the downslope, when it's a bit harder, the economies work for us. The automation helps not having to invest in more staff because you can't, that sort of thing. So that up and down didn't matter so much for us, even though it happened.
So I'd like
Mind
to
you,
ask both of
funding
you-
for ourselves is different business.
Yeah. Okay. I mean, I wouldn't mind touching on the VC funding side, but before I get in there, Claus, Jacqueline had mentioned once you're in, there's a lot of work to do. And you also, Claus, sort of referenced the sort of the evergreen nature of RegTech today. Yeah. When your organizations get inside a large financial institution client, you come in there because you've got a particular expertise. Are you finding that whether it's through the evolution of technology itself, the way that artificial intelligence and software is moving, or the demands you get once you are a trusted fintech, that you're called upon to do other types of things outside of what it just says on the tin? So is it land and expand, or is it stay in and just go drill down and just find more clients and drill down into those doing the same thing?
It's a little bit of both, right? So I think, for example, but because we are talking to compliance and regulatory teams within a financial institution, it gives us, like I said earlier, an insight into the future and what they are struggling with. So at one point it was ESG, right? That's kind of quietened a little bit now. Maybe it's very politicized in the US, and I think Europe is struggling with other things like inflation, etc., right? So I think land and expand definitely, and to get a bigger share of the wallet in terms of the actual work we are doing with the solution, the incumbent solution, but also it allows us, opportunities to use our platform for other stuff. So for example, Tier 1 did ask us recently, how about using your platform for monitoring cyber regulations changes? Are you able to do that? Are you able to look at our policies and, match them against the change in regs and tell us where the gaps are? Right. So this is a POC that we are kind of like in the midst of discussing. And these are real opportunities that come our way, right? For example, when we deal with an insurance company, they could have ESG reporting requirements that may not be that complicated, right, compared to an asset manager, for example. Yeah. And we can come in and serve that space, right, if that's where we want to play. So in the way we run our business, we actually cultivate partnerships because we understand what our clients want and we are trusted, right? And because we were previously in their shoes, right? We have the capability to evaluate other vendors, right? Okay. And to decide, how we can partner and bring some of these value add for them.
Right. So you may not be able to do everything yourself, but you can help them find the right other fintechs or other tech or other providers of some sort that can fill in those gaps. Claus, do you get to a point where you can get a little ahead of your skis with this sort of thing?
All the time, obviously. It's a funny journey, actually, in the tech. You start out as a very young company, and all you have going for yourself is innovation. You have the tech, you have the new stuff. The traditional vendors in financial institutions don't. So that's why they look at you, and but you're not trusted. Your word, I think, puts it like perfectly on the spot. Trusted fintech. It's a bit of is a problematic term because you want to keep that edge of being an innovative and having the latest, while at some point you also need that trust to get into bigger shares of a company wallets, and that is land and expand. We see that duality all the time, and by now I didn't think that when we started. I thought it would be ever more customers, and we have always the latest, and that's what we bring to the table. But by now, we're also a lot more trusted. And as a trusted technology partner, we can help financial institutions a lot. And that's what they're looking for, actually. They're not looking just for the latest. They look to something they can trust in, and they know they won't be let down.
There's trusted partner, but the way that AI is evolving into generative AI, now the tech itself is not trusted. But everybody's very interested in this. So I'd like to ask, is Gen AI having an impact on what you do? Is it relevant to what you do? What's that discussion like? Jacqueline, you want to have a go at that?
Yeah, so I think Gen AI is definitely a big talking point, right? And many financial institutions are making plans or already experimenting with it, just as they were with blockchain a couple of years ago. And though we are seeing an increasing, range of use cases, I think a lot of them are still efficiency plays, allowing compliance and the reg teams to do more in a quicker manner, right? The main issue with Gen AI and RegTech, right, really honestly, is that in RegTech, you need to be very precise, right? So when a regulator comes knocking, right, a financial institution needs to have that confidence to be able to explain the model and why, they provided that output or report the way they did. And although we are beginning to see more explainable AI, I think honestly, AI is still playing a lot of catch up in many of the areas, right? Just take, for example, they have to keep up with scammers if it's a fraud AI, right? A fraud detection AI. And these scammers are continually, right, at an increasing pace, changing their tactics. Can AI really keep up? I think AI will be a step behind from my personal view. And I think, because of that in RegTech, right, the human expertise or the human expert in the loop is still very much needed, right? And you can't do without it, right? I'll give an example. So Gen AI may be very good at summarizing a 200-page regulatory report or document, but it will still take an expert, right, to read through it, to understand what it means, and to assess the impact and the actions that need to be taken.
Right, because when you file something to the regulator, that's got to be 100%.
Yes.
Yeah.
It's got to be, yes.
Right.
Or you might be fined.
Yeah, and Klaus, on your end, if you're onboarding a customer, I guess you're not really responsible for the decision whether or not to onboard them, right? That credit decision would be up to the bank or whomever, but
same as with Jacqueline. There has to be the human element in there. Absolutely. As I see it, the technology always works in these cycles. At the beginning, there's a lot of hype. Then there's the realization that there are risks built into the technologies. Then there's a more systematic approach, and finally there's broad adoption. We've seen this a number of times before. We've used AI, like traditional AI, machine learning, for data extraction and categorization of, for example, the difficult problem: is this shareholder name, a company or is it a person? That's actually we've used AI for that for a number of years. And then cloud technology in the first place. That's a similar curve there. At the beginning, nobody in the banks would want to touch it. Then everybody wanted it because of the scalability and the prices and all that. Then they came up with elaborate frameworks how to make it safe, and now everybody is using it. So I see the same thing happening with AI. Generative AI, just as traditional AI, needs to be sure what's the training data, how can I explain the results, and how can I have human oversight. But if you use it in specific areas, then it can be absolutely transforming. That is like there's a lot of enthusiasm and fantasy now in this space. We're all experimenting with stuff. In our case, for example, one of the biggest challenges is understanding control of a company. Now, control is shareholders and of controlling entities as in directors. But it can be complicated if there are provisions in the articles of association, the very contract that the company is formed upon. And that is a free text document. You couldn't at scale analyze these before. Now you can. You can pick through a 70-page memorandum of association and find various share classes, there are different voting rights, and you can flag that to a person. Then you might not be able to automate everything, but just that is an amazing move forward. Another one would be think about adverse media. I remember learning about how a large Hong Kong bank actually does adverse media in Google. They Google the name and then in quotes a long string of adverse keywords like fraud and money laundering and so on. And then they look through the results. Now you can have hundreds of results. Where do you stop? And I had two different answers. In an insurance sector, someone said, we stop at 2 hours. We don't go over 2-hour mark for one customer. And in a bank, they said, we stop after page 2 of Google. Now you can do this at scale, because the problem always is the mentioning of that name on that page related to that negative news page, or is it just adjunct? Is it another articles on the same newspaper website, just on the same overview page, that sort of thing? You can do this at scale, so you can watch wider net and can automate one of the biggest problems there.
Yeah,
I think there's amazing possibilities now.
Yeah, let's talk a little bit about as we're coming toward the end of our talk. I'd like to talk about 2024 and the way that regulations are moving. What to expect? What are going to be one or two big things that you are keeping your eye on, particularly in the Asia Pac region, that's going to be relevant to financial institutions doing compliance. Jacqueline, one or two big trends that you think are going to be dominating the RegTech situation this year?
I don't know. I guess maybe we're very fundamental people, right? I mean, the way we look at trends is that it's the same trends that's basically driving RegTech adoption over the years, right? The fact that regulators are asking for more and more data from regulated entities, right, at more granular levels and higher frequency. So one example would be we are seeing regulators, right, asking banks to submit now their loan book at the per loan level, right, instead of at an aggregated level in the past. So to do this at higher frequency, providing more data and granularity, you really need to leverage technology. Right, there's always new technology, new regulations around the corner. For example, regs for ESG, regs for Web3, right? And for us as a company, I think we're most interested really in the problems that are faced by our clients, right? So we have a variety of solutions, starting from shareholding disclosure and into the ESG, cybersecurity, even the reg data management space, right? Because data has always been a key component, right, of all these reporting requirements.
Yeah. Are there any big data laws coming on the horizon in any markets in this region that will have a big effect on what you do or what your clients can do?
Yeah, so I think ESG is one area where we are seeing there are so many different frameworks to adhere to, and some new regulations are coming into play. For example, in Australia, in Singapore, right, the MAS is already requiring regulated entities to make disclosures, right? And of course, the SGX for listed entities. And we're also seeing, right, some regimes, right, outside Asia, for example, in the US, where, the shareholder regs have not been changed for decades, right, and are starting to, and we're seeing changes for the first time after many, many years.
Yeah. Okay.
So, yeah.
Yeah, a real mixed bag there. Klaus, any big trends you want to add to what Jacqueline outlined?
I agree with Jacqueline that is broadly supportive. It's really good. There's no lessening of regulation, and there won't be. And if you think about it, like making ever more strict AML regulation and reporting regulation, the only way out really is automation and using tech, because that will lessen the impact or even completely reduce the impact on the financial institutions and their customers. I see with great pleasure that HKMA is super supportive of RegTech. They had their RegTech Days events, and they have a data summit, and genuinely try to encourage their authorized institution at any point in time to use more technology to make it more scalable. That's very good. I see that in MAS as well. I see MAS will broaden the net of anti-money laundering regulations to more sectors. We've seen that in Europe before. In Europe, for example, art purchases over 10,000 euro are covered by AML laws. You now need to identify the seller and the buyer. After the 3 billion Singapore dollar anti-money laundering or money laundering case there in Singapore, that's still ongoing. That's incredibly juicy there. Everybody is following it. They are now thinking about introducing regulations for high-end car dealers and watches, and I don't know, maybe even handbags.
Right.
That would be hard, Jacqueline, wouldn't it be? We see the same thing happened before in the EU with the introduction of the AML regulations number 6 there, and what I'm watching in regulation and what I think is very interesting is the trend to CBDCs. So those experiments with central bank issued digital currencies, they presuppose one thing because they are inherently very different from the freewheeling Bitcoin, Ether, and so on.
This
like
is sovereign money in a
capitalists.
regulated institution.
Yes,
not,
it's no
wildcat operator.
What they presuppose is identity. Because you do need to tie those coins to a person or a company. So you need to get digital identity right, which is super interesting for us in this space. So I'll be watching that very closely.
Great. Well, that's all stuff that I'm sure we'll be talking about, and in my case, writing about over the coming year. Last thing I want to hit on with you folks is we had touched on it, but I steered us away at the time. But as founders, with the funding, it's been a tough environment for funding. But as Klaus mentioned, you guys are sort of in an evergreen space, so you're not riding wild hype cycles. But talk a little bit about where you're at in terms of what kind of runway do you need in this kind of environment, because obviously onboarding with these large institutions, long B2B sales cycles can be tough. And also now that you're both getting to a maybe midpoint of a startup's life as startups, are you starting to think about exits? So maybe Klaus, you want to start off with this one? We'll wrap up with Jacqueline.
I don't want to start with the exit. As a founder, I'm having too much fun actually.
Okay, well that's good, but you've got people need to get paid. So
yes,
what do you see as
absolutely.
kind of the trajectory?
In a way, if you buy into the whole startup journey, you at some point need to make a decision: do I take outside funding or not at all? If you can avoid it, that's great. Usually, especially in a space where you have such a big difference between your own size and culture and the customers and the sales cycle being so long, and the technology having to be developed is quite substantial and has to be perfect to have a chance in a market. That means you do need capital. I don't know how it is for Jacqueline. We did take outside capital, modest amount, but it also means we're on track to do an exit at some point and to have further capital injections. Now, last year was the low point, as we all know. Valuations collapsed all over, and a lot of people got filtered out of the market entirely, dropped out. Fortunately, we were able to keep afloat and keep going to profitability, and I think that's what most people are doing right now, and kind of looking forward to the time when the funding environment is better and allows you to scale easier, because that is something that we're looking at. You're right, we're at that point in our company history now. Going on organically is possible, but we now know what to do with funds, and we could deploy them and make a lot of money in the process for the investors. So it does make sense, and the pressure is growing to take on more funding.
Jacqueline, what about Artius?
So I think, talking about exits, I think we are always thinking of an exit. You have to, right? I mean, this is practical because that's what your investors will be thinking of as well, right? How you would exit and when you would exit and how much you would exit at, right? So that's always a big question that's always on our minds. And we do have some, some simple answers that we have ourselves. But I think mainly from a capital point of view, I think we are still at the stage where we need capital to grow. Right, and I hope that with the fact that we have amassed quite a few very good names, right, we will be able to actually close our deals a little bit faster, right? Because I think in our area of regulatory expertise, right, it is an area that's very deep and there are few competitors. So if there's a need, right, and we've been fortunate, we've won against our competitors who are much bigger, much older, right, in this space. So, and because it's multi-jurisdictional and the rules are broad and deep, right, the bar to entry is high. It's very difficult for newbies to come into our space, right? And I think that land and expand is going to be important for us because, that's the way to basically naturally provide capital for your business to grow, right? And I think at some point when we hit that, hopefully that J-ish curve, I say, right? Because I think RegTech is a very niche play, especially where we are. Yeah, we'd be happy to let it go, right? But meanwhile, like what Klaus said, I think it's important to have fun on the journey, to do meaningful work, right? And for us, I think we'll never really leave the RegTech space because there's still a lot to be done. So even selling out, right, we'll probably take a break, spend a few months on the beach and come back to the fold because there's really a lot to be done in this area. And there's a lot of fun to be had because, this is such a deep and broad area, right? We learn every day. I'm sure it's the same for Klaus, right? Not just about technology, but even about the regs themselves. That's why we are seeing
yourself.
Yes, and ourselves. It's been I have to say it's been a great adventure. There were moments where it was really tough, right? No kidding. If I had known there would be those moments, maybe I would have never started, to be honest.
Same here.
Yeah. But
I can relate to that as well. DigFin was a startup too.
Yeah. But I'm grateful to be on this journey. And I think, people in the industry, I was on the buy side in the industry, and then I became a vendor in the industry. But today, I think my clients trust me, right? Because I know what I'm talking about, and I've been in their shoes, right? So we don't take this trust lightly. It's not just for the company, right? It's also for yourself because we are from the industry. I want to leave it, and when we leave it, want to leave it with a good name. I think for us Asian, right, the name is very important. It's basically our legacy.
Great. I think we're going to end it there. I'm happy to have taken a little extra. Normally we do a half hour. I went a little long because we've got two of you, and I wanted to make sure we got a chance for both of you to share your stories. I'm very glad we did that. So it just leaves me to say to Jacqueline Pang and Klaus Christensen, thank you so much for joining me on DigFin VOX.
Thank you for having us.
Thanks, Jame, and thanks, Jacqueline. That was wonderful. That was a really good chat here. Thanks for that.